Welcome back, Alejandro. We're so excited to learn from you about Dollar General. And I think a lot of people know about Dollar General. There's many shops out there, and you're going to take us through from an investment perspective what this company is all about. So feel free to start your presentation, Ale.
Hello, Michelle. Thank you so much. It's a pleasure to be back with you. It's been a little bit, but again, very excited. Keeping my mind busy studying companies. And well, the first thing that the reason I picked your Dollar General is because from about middle of 2022, the stock was at about $240, and now it's at 80. And since this is definitely not like a tech stock that is just everybody just guessing what's going to do, it's more like a tangible thing. It definitely grabbed my interest, and this is how I started studying. I will talk a little about this, and there's a great book called My Father's Business, which is the story of Dollar General, told from the second generation, which is the guy who really like grow it. And definitely Buffett and everybody that we follow always says that the more you know about a company, the better. And having the opportunity to read like the biography of a book, I think is a great start. So I read this book, and definitely for someone that wants to study this company, I think it's a great use of their time. So some facts about DG, or Dollar General, is the largest discount retailer in the United States by number of stores with above 20,000 locations. And this is pretty crazy in number of locations, but for example, comparing to Costco, which is a company we talked in the past, Costco has below 1,000 and has a market capitalization of 20 times larger than DJ. So definitely, I mean, different business model. But again, at the end of the day, I mean, there's certain type of competition between them. So I guess it's a good perspective. Different from Dollar General, Costco, I think is touching all-time highs at the moment. So definitely super interesting to think about that. One is subscription business, one is not. Interesting comparison between them two is that Dollar General has a sales per square foot of around $200 to $250, while Costco is at above 1,000. So it's definitely different, but at the end of the day, I mean, we as value investors are always looking for value, and uh, we have to be able to predict with the best degree of accuracy how they're gonna behave. Um, they are trying to expand. One of the things they did is they just opened in Mexico like a year ago, and again, there's not much information about that, but I mean they're trying to apply the same business model in Mexico. They also opened a new concept for higher end consumers called pop shelves. They are planning to have 1,000 by 2025. I did went and visit one of them, and it's funny because in my Google Maps I type a Dollar General, but I tried to go to a Dollar General, but when I ended at the pop shelves, is fancier definitely. I think it's different. So as Buffett always says, it's not that easy to make it work. So this type of move, I guess, is what companies need to do to try to grow, but um, definitely a different business. So I guess to position this in people's minds is going to be difficult for them. But again, who knows? And if you ask me, I mean, I'm super Buffett-like, and I always like to keep doing the same thing without trying to move that much of the path. But I guess I'm not a CEO, so I don't get to decide. The company was founded in 1939, which is almost 100 years. I mean, a little like 85. So obviously it has a great history, great development. As I mentioned before, there's this great book called My Father's Business, and definitely, I mean, reading about a company's all history makes you really like understand it way better, and some of the key factors which I went through is like how difficult it is, to start, how difficult it is to work with your family. I mean, this part is pretty interesting, and not sure if you had the opportunity to work with your family in anything, but I did, and I guess people that has feel identify of how difficult it is, because it's not only is hard to develop a business, it's so hard to just keep that relationship, because you go over big boundaries when you work with your family. But I mean, this is the story of success. So I mean, even though it was hard, I mean, they make it work, but many people don't. And theft is probably the biggest problem, and one that to me is the hardest to kind of tell a story about how they're going to solve it, because um, it takes about like 3% of their sales is lost through theft. So I mean, how can they solve this? I'm not really sure. And I mean, I listened to like 5 conference calls, and every single conference call they talk about this, but they don't really. I mean, they always say, "Oh, I'm trying to address this," but um, they don't really have found a way. And especially with the economy going bad, for example, at the moment, I mean, so there's more theft because there's more like people that need basic essentials. And later on, we're going to see how it is divided, which makes you understand a little more. So the business model consists of providing everyday essentials to a large population, complemented by general merchandise. And we're going to see in the next slide the numbers, but this is super interesting because they keep growing by like sales, but their net income is getting lower because um, they're growing, but most of it, the growth is in essentials, which is the lowest margin items. This is very interesting to me, that stores are located in many places with little or no competition, with 80% of the stores in towns with population of 20,000 or less people. So the Walmarts, the Targets, the Costco don't get to these places. So they really get to dominate these places. But at the same time, I mean, the spending, the disposable income from these people is not that much. So these people go to Dollar General as a monopoly. But the thing is that since they don't have that much disposable income, they don't really get to grow that much. But at least they have the flow, and as we always know, I mean, businesses are always trying to get people inside their doors, So they are doing that. They are growing like in market share. They are growing um, getting the people in their spaces, but the margins are lower. Now, how is this going to look in 10 years is the real question, because if we get to a conclusion, or you as an investor get to the conclusion that this is going to look good, and there's cycles in the economy, and people are going to have money again, and for some reason they get a way to um, combat this theft. I mean, it's definitely a great opportunity, but again, we always just talk about what we think with all the honesty, but we don't know, and investing is definitely a guess, and you have to be the biggest journalist that you can be. They offer everyday low prices, as I said, where customers save time and money since it's easy and fast to shop. They have a limited items per category, which also gives them, like, they don't have to have so much inventory, so they rotate faster. They get better prices with the suppliers. They also being located in towns so little. I mean, the rent in those places is very low. So I mean, it's a low cost operator, which I mean, obviously, Buffett loves. He always says about you have to have a brand, or you have to be the low cost operator, which in the case of Berkshire, I mean, we can see like Geico was what I think he always says it was his second love, and the reason was because they were in a business which is an essential, to me comes to mind. Dollar General is an essential. You have the essentials, and it's the low-cost operator in where they operate. So again, definitely a very interesting business to study more, and especially since it's going down so much. So the different categories, there's 4 categories: consumables, paper and cleaning, products, packaged food, perishables, snacks, health and beauty. And here's where, as I said before, is their main sales. And the lower you go down in the little list, the less they sell. And that's the thing. I mean, if their margins, I mean, the more they sell at consumables and the tendency is like I went 10 years back and you see how in around 2012, the consumables was like 72, 73% of their sales. At this moment, it's above 80. So, I mean, it's a big growth, and this affects the margin. Here's by the numbers. But as you can see, I mean, the sales are growing. So, I mean, you are getting the people at the store, and just because at this moment the numbers are not looking great doesn't mean this is how it's always going to be. And as I said, I mean, you at least are getting the people at the stores, like, you know, which this is how, I don't know, Facebook, I mean, they just want you there, and they just start selling you different stuff. I mean, this is definitely retail and it's different, but it comes to my mind that, I mean, even though they are not doing great in net profit, they are keeping the people at their stores and they are gaining shares. So, and this is essential. I mean, you have to buy soap, you have to buy toothpaste, you have to buy toilet paper. So this is not something that is going to go away. And I don't, one of the interesting things is like I don't see a way of how you can just, I don't know, come with something and just take the market share of those little towns of 20,000 people. How to take the sales out of a Dollar General? I don't know if, to me, I mean, there's not a real answers, but uh, the problem with theft is what really like prevents me of like being able to have a very assertive conclusion of the company. So the stores grow, as I said. Look, I mean, they, even though they, I mean, their stock has gone down, I mean, they keep investing. So I mean, the capacity keeps growing, and I mean, the people keep going to their stores. So there is some certain closures, but I mean, for everyone that they every 10 that they open, I mean, they've been closing one, which many times is just relocation, just getting better. And again, the problem with theft is what really worries me about this interesting company. Balance sheet, right here we can see, as I always like to see, the net property is about 6 billion after depreciation, with merchandise and inventories about 7 billion, but they have accounts payable of 3.5 billion, which if you add that up, it gets you to like around like 9 billion, which to me is the return on their invested capital. And at the moment, as I said, is not that high, because as we see right here is 1.6 billion. But if we see the past, they were in below 10 billion of capital, working capital plus net property. They were making about 25%, which is, I mean, definitely great in such a big company. And I mean, being after almost 80 years, they keep growing at about 5% a year. I mean, that's pretty big. For example, I don't know, I can think about stores like Lowe's and Home Depot, which are huge, but they don't, if you see the growth per store, I mean, they're really not growing. I mean, they're growing sales and becoming more efficient and just trying to improve as a business, but not many at this stage of time have grown and keep growing so much in capacity. And here's the debt. I think this is one of the big things that is worrying the investors, because the interests have grown a lot, and they do have about 80% of their debt due within 6 to 7 years, and with interest rates being so high, I mean, these worries and I don't know, sales going low, uh, interest going up. But at the end of the day, this is stuff that, I mean, if you are able to tell the story and conclude that this company is going to go back to their growth in sales and their margins are going to go back to normal, yeah, I mean, it's a short-term problem that you can just solve with patience. And again, we as investors, what we need is to buy value, not really a growing stock. So definitely, to me, I mean, a great opportunity to study this wonderful company, to get a grasp of what it is, because definitely it is an essential. And yeah, so a little about the book. As many small businesses at the beginning, Dollar General started growing a lot without the structure. And this is a very important point, because you can't imagine how many stories of, I don't know, companies that have 20, 30, 40 stores, and you read about them and they're like, oh, they don't know how much they have in inventory. They don't know how to, their distribution centers are not really in the right location. So there's so much waste. And to me, this is interesting, because many entrepreneurs are not really that structured. They are more about growing the sales, taking care of the customer, which I think is the essential part to really um, make a great business. But this is why I believe so many times these entrepreneurs that are able to grow sales, they need somebody that comes with the accounting mindset and really starts optimizing. But again, this has to be obviously taught well, because sometimes too much optimization always like affects like service. So this balance is very hard in businesses, but definitely very, very interesting, because I mean, I think I don't remember exactly, but they were pretty big. And if you see the technology they had and the systems they had, was super, super like old style. And I think that dad had this equation out of just putting like, I don't know, 4% was theft, but I mean, it was not even calculated. He just guessed it, and the structure wasn't there. And so, I mean, they were already a public company, and the structure of how much they were losing in theft wasn't even there. So definitely a very, very interesting thing to me to learn about, because I don't know, many people that might see us are entrepreneurs, and it's definitely the most important thing to take care of your customer, have sales, get better at your at the outside, what the customer can see. Because I mean, like Sam Walton said, I mean, the only boss is the customer. But in the inside part, or in the accounting part, I mean, you really have to have it clear. And many times there is, I don't know, more labor than you need. But I mean, if you understand that is because you think having more labor than needed is causing a better service, I mean, that's justifiable. But the problem to me is that many times you just have, I don't know, 20 people for a restaurant that they don't even know how, when they are selling their peak. And this obviously happens the smaller, usually the biggest the problem. The growing up in a small town gave the founder a good advantage to understand what the customer was like. So they grew up in small towns, and as we said before, 80% of their stores are at these places. So I mean, he understands this type of people, a lot of people that work very hard for their paycheck. So these people really understand value. You cannot really fool hardworking people with just like brands. So they really understand what, like, a, I don't know, a pant that is $10. I mean, they understand this is gonna last, not like because you put, I don't know, Lululemon on it, it's gonna cost 10 times more, but that the thing is gonna go away in like couple of days. And yeah, I mean, and the reason I mentioned Lululemon is because that company also has been losing a lot of ground, but I mean, again, I think it's a pretty interesting company, and there's also a book about them, so I may try to dig into that one also. So, but yeah, definitely a great company, and I mean a great company from the perspective of that, definitely interesting to look, very interesting things to analyze, and yeah, that's what I had for you, Michelle. That's my analysis, and definitely will myself keep looking to see if maybe we can pull the trigger on this one, but I have to definitely get to a conclusion on how they're gonna combat theft.
Yeah, for sure. That seems to be one of the things that are outstanding. And I wonder, as a way to compare it to other stores, like how much does Walmart struggle with theft? Like, is there something like say Walmart or Costco or Target does that they're able to address theft better? For example, I was in a Target a couple of days ago, and there are like three people who are watching the self-checkout. Like they're wearing like the like a colorful outfit, like they're putting away shopping carts, or like like the people who do construction, they're wearing the colorful reflector vest, but they're really just watching the self checkout. So is maybe Target addressing theft by having three people? They're not checking out for the customer, but among the six self checkouts, they have people who are monitoring it. And other places, like in a grocery store, sometimes they only have one person monitoring the self checkout. So there could be different strategies that retailers are taking to address the theft and where the theft could be happening. Like maybe Dollar General's model doesn't involve self checkout, but maybe how do the stores monitor along the aisles when people are just going through the aisles and then they quickly put it in their jacket or their bag? Or what are some of the options? Like I know in department stores they would have like the ink on the tag, and then in department stores they have to use a fancy gadget to take off that ink lock device on a piece of clothing that was more expensive. But you don't really do that. But in some other stores, like maybe Best Buy, they put like a thin strip of like a security tag, that when you scan the item, maybe that can desensitize the security label. So I wonder, some of those scales, obviously Best Buy or a department store, they sell higher priced items, but how can you take some of their anti-theft technology and maybe apply it in a this kind of scale where the purchase items are lower in value, but there's more volume? Like it could be difficult because maybe using that technology is just way too expensive compared to the value of the products they're selling. So there's a lot of considerations. I'm sure the management is having, like, how do they address that? And I don't have an answer. I don't know what the answer would be. I'm sure if somebody has an answer, they'll pay that consultant a lot of money to solve the theft problem. And the other thought I had is, even though it seems good at face value that they're growing so much and that they are putting up new stores, like it seems impressive that they added 1,000 new stores in each of the last 3 years. That's really impressive. But what's the cost of doing that? Like you said, they're increasing the debt, and investors don't like that. So that's causing maybe some of their stock price to go down, because similar to when we talked about Domino's, the more that a company is taking on debt and making less of a net income, then maybe that is a little concerning for investors, where they're not seeing as much of a return on investment, maybe, or maybe not yet. Or could there be other factors at play, that they're following a good rule book or game plan of, this is the way that we've been successful in the past? But what could also be happening as the economy is slowing down is, what if it's starting to be a negative cycle? Like the more that you have these lower cost options with people who have less disposable income, it's actually maybe worse for the community in a counterintuitive way. So what I'm trying to say is, like, I think I heard about this with maybe more dollar stores like Dollar Tree. Maybe I'm not blaming Dollar Tree, but what I've heard is um, I think there's a certain psychology about lower cost type or lower price stores where when you put more of those in neighborhoods that are low income, it might bring down the sort of prosperity of a community because like it's catering to the needs of low income people, but it's also not giving them a way to prosper more, if you see what I mean. Like maybe some of these stores, maybe they might not be staffed as well, or they might not have the best options. So even though you're saving money, like as a consumer, you have little disposable income as it is, but it it may not be improving the cycle for people. Like so, if you think about the life cycle of people in a lower socioeconomic area, if they want to go up in life, like they want to have social mobility, how is this kind of store helping those people achieve social mobility to have a better community? So it's very counterintuitive, but whenever you have some of these like lower price stores, and I know Dollar Tree is not the same business model as Dollar General, but there's a certain psychology to having some of these stores that I don't know if they're improving the society that they serve. And I think that's one of the key questions of, yes, it's great from an investor standpoint that we can invest, but from a humanitarian standpoint, is this really the best type of business to serve a community? Like there's some businesses that serve a community well, and the community prospers more by having that business in the community. And there are other kinds that I don't know if it's as much of a net benefit to society. So I think there's a little bit to study there also of trying to validate, is that a true thing? Because I think I learned about that from some, I don't know, documentary or something I might have watched a long time ago about the psychology of these dollar stores. And I know Dollar General is not a dollar store like Dollar Tree is, but it it's a little bit of the mindset and the mentality. Like, does it keep people in a lower socioeconomic position, or does it help them, like because they're saving money, they can now reallocate their disposable income to better things, like say they can now invest in their homes and improve the value of their homes, and then that brings up a neighborhood. Like there are some of these domino effects that it makes me wonder how, what will happen downstream, or if it doesn't really contribute that way. So a lot to think about. That's some of what I'm wondering about, of how can Dollar General make a community prosper? That's one of my questions I would have if I were to invest in them.
Yeah, I mean, I think you have definitely a great point. Um, if you ask me, I think that is a little similar to how Walmart was developed. I don't know if you remember. I think we talk. No, we haven't talked about Walmart, but in Made in America, I mean, Sam Walton's autobiography, he talks of how many times when he got to a new place, I mean, a lot of the people will complain because obviously this destroys the little guys. But and to me, Dollar General can act in a similar way because yeah, I mean, let's say in a 20,000 community, there is two, three, or four just grocery basic things. But obviously, these people are not able to buy at the prices that Dollar General can buy. So I do think it definitely benefits. But as you said, I also check a lot of videos on social media, and yeah, I don't feel Dollar General is very. I mean, there's a lot of complaints, and um, yeah, I don't think the street likes Dollar General that much. But if you ask me, I mean, even though obviously it does affect the mom and pop grocery store, at the end of the day, I do think it's the best for the most
Mhm.
because it's lowering the basic, and especially because they are selling essentials. So, as you said, I do think it gives a little more money, disposable income, maybe to go to the movies. In other cases, I mean, they are, instead of paying for I don't know, a soap and a toothbrush and something $10, now they are paying $5 because of General has the scale and the distribution, if like the mom and pop shop cannot have.
Yeah.
So that will
Mhm.
be my perspective. But again, as you said, I mean, it's something definitely dig deeper, because that will make a company last in the long term, as you said.
Yeah. So yeah, it's very fascinating. And maybe like you said, it's a great opportunity to not only study, but if this is truly a great business with future better prospects, like when they've grown more and they've paid off the debt, they'll be able to produce more net income and net profit, and that would be better for some of the investors. And then the stock price could go up again someday. So right now, this it could be going through an event for some reason, those even if the street doesn't like it, but maybe other investors can see something that Wall Street is missing about this company, and they do have a fundamental service that to the certain communities they serve. If there are less mom and pop shops, and this is the best thing there is, because all the less efficient businesses went out of business, so they serve a niche role that other people, not even Walmart, can fill that role. So yeah, there's a lot of value here in learning about this company, and I'm grateful to have learned about them from you, Alejandro. And thank you so much for doing this. Maybe we should talk about Walmart next time and see how their business models compare.
Okay, definitely. Yeah, definitely. Walmart is a company we need to do, because it's different from Dollar General. I think that their stock has grown, and yeah, maybe it will definitely help us understand more about Dollar General. So as Buffett and Munger and all of them always said, I mean, you don't really know where you get that insight that is going to make you tick in your head. And yeah, definitely.
All right, great. Well, thank you so much again, Alejandro. I look forward to the next investment discussion about a company. And thank you again for doing this presentation for the YouTube audience. This was really great to learn from you.
Thank you, Michelle. Thank you, everybody.
All right, bye-bye.
Bye.